is that I don't own gold because I think it might go from 2,100 to 2,500. I buy gold because I'm afraid it's going to go to $7,000 or $8,000. The set of circumstances that would give you a quantum increase in the price of gold are almost invariably unpleasant. I would prefer that it didn't happen. I'm a 71-year-old guy, very happy with his current lifestyle. I'd like to see no disruption. But I see a whole bunch of reasons why gold could go to 7 or 8,000. I'm not saying it will. What I believe is that it is a contingency that is certainly worth insuring against if you can do it, and I can do it.
Legendary investor, speculator, and founder of Sprott Global Resource Investments, Rick Rule, sees the demand for precious metals quadrupling in 2024. Rick believes there is a high chance that gold and silver prices will get significantly higher this year, buoyed by increasingly gloomy and devastating macro conditions in the United States and other economies worldwide. A quadrupling of demand will, of course, have an instantaneous impact on prices, which is why Rick's prediction for gold is that the precious metal will hit a new all-time high of $7,000 to $8,000 later this year. Though Rick clarifies that his prediction is not cast in stone, he adds that the probability is very high, especially because of how badly the world's economies are being managed. In one of his latest interviews, Rick explained that he is not as impressed as other gold bugs about the metal's latest price movements. Despite being at all-time highs, gold is still below Rick's expectations. During that interview, the legendary investor explained that prices are still so low because of dwindling demand. While central banks have been accumulating gold at the fastest pace in over 100 years, other investors, especially retail investors, are showing less interest in the precious metal. But what happens if the economy slips into a recession or the banking sector experiences another crisis that, if experts are right, will be multiple times more damaging than last year's regional banking crisis? Rick believes if both or either of these events happen, investors will rush toward precious metals like gold and silver, which have served the world through recessions, depressions, and other forms of economic declines for thousands of years. During a recent interview with What the Finance podcast, Rick fully discussed his views on the precious metals market, specifically about why central banks are buying gold and silver, and why he believes prices will get much higher before the year ends. While we bring you clips from the interview, please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on gold, silver, and other commodities. Thanks, and enjoy the video.
In a rear-looking way, the answer to that's no. The buyers have been the central banks, and the central banks' motivations have been primarily the weaponization of the U.S. dollar, the attempted export of U.S. policy and political norms to other countries outside the U.S. dollar. The U.S. dollar, the United States government, has tried to use the U.S. dollar to increase its influence in a bunch of countries that don't particularly want to be influenced by the United States. The consequence of that is that the countries have, of necessity, begun to substitute U.S. treasuries and U.S. dollars as both stores of wealth and mediums of exchange. We have seen consistent outflows from retail physical ETFs, which suggests that in Western nations, at least, the citizenry have not been active buyers of gold. In fact, they've been active sellers of gold. The gold price has moved up because the central banks don't trust the United States, and after not trusting the United States, they don't trust each other, so that the mediums of exchange outside the US dollar aren't really renminbi or yen or rubles or dinars or anything like that. Increasingly, you will see them short-term in gold or in dollars. My belief, however, is that the ongoing deterioration of the purchasing power of a bunch of fiat currencies, but the most important of which is the US dollar, the reserve currency, will cause more and more human beings, as opposed to governments, to also view gold as a store of value. Anthony, it's worth noting that in the largest savings and investment market in the world, the United States, which accounts for, at last count, 23% savings and investments worldwide, that the market share of precious metals related investments relative to other forms of savings and investment assets is less than 0.5%, which is to say that 0.5% of all savings and investment assets in the United States are involved in precious metals or precious metals related assets. The mean market share of precious metals over the last 4 decades, according to JP Morgan Chase, was 2%. So if we merely had reversion to mean, which is what I think we're going to have, you would see demand for precious metals and precious metals related assets in the United States, the foremost savings and investment market in the world, quadruple. And I think that's precisely what's going to occur. People have been saying to me, Rick, when is the gold price going to go up? I began adding to my personal bullion holdings in 1998. So I view the ascent of the gold price really as having started in 2000, which is to say in 2000, the price of gold was about $250 an ounce. Now it's about $2,100 an ounce. So I would suggest that gold has done what, 8.6, 8.7% compounded a year for 24 years? When is gold going to go up? Well, the year 2000. People have expectations that were set in the decade of the 1970s when the gold price went from $35 an ounce to $850 an ounce. Rational expectations would suggest that the answer to that question is in hindsight. My personal belief is that the rate of increase in the gold price is going to accelerate because of the deterioration in the purchasing power of the US dollar, particularly relevant to the interest paid on fiat-denominated savings products.
In addition to his bullish outlook on precious metals, Rick is also very bullish on the overall commodities space, especially the oil and gas sector. Fossil fuel sources like natural gas, oil, and coal have been repeatedly demonized over the past few years in the bid to move toward renewable and cleaner energy sources. Of course, the world needs to move toward cleaner energy sources. However, until we can effectively do that, it's no use hypocritically turning away from public fossil fuels while still completely relying on them in private. Such is the hypocrisy of most of the world's governments. According to Rick, it will take decades for the world to complete that transition if the day ever comes. This is why, despite the bad press, Rick is still quite bullish on these commodities and one other metal. Let's get back to the interview.
In terms of the broader commodities, Anthony, I think the real story is the ascent of humankind, if you will. There are over 8 billion of us on Earth, and more every day. We've done a great job over the last 40 years, increasing the material well-being of the poorest of the poor, raising 1.5 billion people from dire poverty being merely poor. That isn't to suggest that there's a lot more to do. There is, and we're going to do it. As poor people get more money, the things that provide utility for them are things that are commodity intensive. When wealthy people or middle income people get more money, they generally buy services, which are not commodity intensive. But when poor people get more money, the stuff that increases their sense of well-being is often stuff that requires stuff. The great commodities boom that we saw as an example in the decade 2000 to 2010 really came about as a consequence of the urbanization of China, and that process is being repeated around the world. As a consequence of that, I am bullish about the whole industrial materials segment with the sole caveat. No, that's not right, with 2 caveats. One caveat would be the increasing role of government and the increasing amount of government theft with regards to privately generated wealth, including in natural resources. And the other would be the threat of recession. I'm no economist, but I note once every decade and a half something goes way wrong. And it's been a while since something went wrong. So I'm a little nervous about the specter of recession, which would delay rather than change my forecast of increased commodity consumption and reduced availability. All commodities will benefit, but I think that investors will benefit from the biggest markets the most, which is to say they require the least effort, and they have the biggest and the best companies in them. So I would start with the oil and gas business. There's a perception around the world that, fostered by the big thinkers, if you will, that peak oil demand occurs in 2030 or 2032. This is pure hokum. Peak oil demand probably occurs in 2065. If you think about peak oil demand occurring any quicker, how would the big thinkers manage to fuel all the private jets that they fly to Davos to tell you to drive less? The truth is that we have invested as a group well over $5 trillion now to increase the market shares of alternative energies in place of hydrocarbons. And we've reduced the market share of hydrocarbons from a high of 82% all the way down to 81%. So I would start with oil and gas, not that I think it's going to do better than other commodities, but simply because it's such a great business. At current oil prices, oil and gas companies are making a lot of money. Despite the fact that they're making a lot of money, in particular, the state-sponsored sector isn't spending enough money on sustaining capital investments to maintain production, which sort of suggests that prices will stay higher for longer. As I say, not maybe the commodity that will enjoy the greatest price increase, but the one that offers the greatest stability and the greatest free cash flow and the least risk for investors. I'm certainly a copper bull as well, but I'm not alone in that thesis. We have underinvested for 30 years in the exploration for and development of copper mines. The consequence of that, with the electrification of the world, is that we face almost certain shortfalls, supply over demand. The timing of that really is a function of whether or not we enter a recession or not. You can reduce supplies if you reduce demand via a recession, and you still don't get a price increase. Absent a recession, I think the copper business looks extraordinarily good.
When investing in precious metals, it is important to have a long-term time horizon and stick to your investment strategy, regardless of fluctuating market conditions. We are in very uncertain times. The economy is showing more resilience than everyone expects, yet government debt continues to spiral out of control, and there will be more uncertainties and chaos ahead. This is why investors like Rick Rule are advocating a return to trusted hard assets like gold and silver that have stayed true to their fundamentals for centuries. What are your thoughts on Rick Rule's interview and his analysis of the current economic situation and market conditions? Please drop your comments and observations in the comments section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks for watching.